Hello, hello. Welcome to Mark's 10 at 10. We'll be going over a few things today. I've got a few things to cover. So the BLS jobs report finally came out. The Fed had been really cooking the books, really not really telling the whole story, and not using the proper data. And the BLS is the Bureau of Labor Statistics, of course, and the level of job creations in the month of March is what we were looking for. And then what happens with the unemployment rate? What we found that happened today as the jobs report came out is that more companies actually cut hours rather than cutting jobs. But if you take the math with that, the amount of hours they cut, which the average worker now 34.4 hours, it's equivalent in hours to jobs is 468,000 jobs lost. So the economy is slowing, but the Fed seems determined on presenting a narrative of whatever it is that they want to share. And what we do know is we have to look at what the actual numbers are. And if right now, job openings are the lowest in the last 24 months. Leisure and hospitality, that's where you've got your hotels, restaurants. That sector of job growth has slowed heavily. It's almost back to pre-pandemic levels. And this sector is the one that's been driving job growth. And it's definitely running out of steam. So right now with mortgage rates, they continue to trend down. For the fourth straight week, mortgage rates fell. And but what that's doing, as we all know, when mortgage rates fall, immediately people will re-enter the market. You can just look at it. Immediately you'll see an uptick in applications, in closings, mortgage applications when rates dip. So we've got more to come this week to see more reports coming out this week that are really going to really sort of shine a light on what's happening more with the economy. But job expectation growth is still expected slow. So right now, the strategies are going to be to continue to talk to your clients, talk to clients about what's going on out there, that rates are starting to fall. There's a little bit of softening with rates. When rates fall, prices are coming down. It's a good opportunity right now to capture something that's out there that may be a little bit lower price than it was 6 months ago, ask the seller for some concessions versus trying to get a price reduction. Now, what I'm seeing in a lot of markets, a lot of markets are already having multiple offers. So one thing I want to explain also is, when you get into, a lot of the markets right now, the vast majority of the major markets that were just surveyed actually had an uptick. So over 75% of all markets had an uptick in prices. So pricing is stabilizing. We're not seeing this crash they talk about on CNBC and some of these other outlets, some of these other pundits. We're just not seeing that. In fact, we're seeing prices go up a little bit across the nation. So this is huge, even though it's just a tiny bit of increase. When you're projected to go down, it's a big deal. So keep this in mind as you're out there. If I can help in any way, thanks for tuning in, and we'll see you next time.